Angela Duncan. I'm trying to think of a good nickname for you, so I'll do it on the fly. Miss Finance. How's it going there, Miss Finance?
I'm doing amazing. How are you today?
I'm rocking it. I'm rocking it. So let's go ahead and jump right to it. We're going to take whatever 20-ish minutes. We're going to talk about what you have going on. You have some cool stuff going on. Number one. Number two, we're going to try to add some value to some entrepreneurs, mainly real estate investors who are looking to get rich and hanging out. How's that sound?
Sounds good.
Just give us a real quick rundown. What is it you're doing? It sounds like you have a strategic alliance going on. It can help some of our listeners and viewers.
Yes. I recently had a partnership this year where we have two funds that we were kind of raising money for, and actually both of the funds just closed, which happens. You get capacity, and we're in a really tough real estate market. So in order to keep the returns that we want to keep for the current clients, we had to close it to new clients. But we can definitely talk about all I've learned about that this year, and we can go into the tax liens as well too.
Yeah, I want to talk about tax liens too. I mean, let's definitely touch base about that. So how about this? With what you have going on right now, what's the number one thing that's going to make our listeners and viewers rich? Just one thing right off the bat.
We're going to talk about tax liens. We just closed the auction time period here in Florida, so learned a lot again this year, but always willing to learn and teach back other people.
Yeah, I like that. All right, let's talk tax liens. Let's give the basics of tax liens first of all. Well, I'll jump to it first, just for educational purposes. Usually tax liens, well, a city can't run without money coming in. If people aren't paying their taxes, well, what's going to happen? Well, there's tax liens that are developed that, depending on the jurisdiction, you can come in and buy, or basically an auction, or buy those tax liens in exchange for it. Well, luckily the city will have money to be able to run, and at the same time, people who are investing in these tax liens, potentially they get the tax lien, and they might even get the property if the person doesn't come through and pay for their taxes. That's a real rough estimate of how tax liens work. And what I would say is, by the way, you can get huge rates of return, number one. Number two, you can do them in qualified plans. We have a lot of people who don't know you can do those in qualified plans. We can set them up so they are done in qualified plans. And as far as conservative, some people say, is it conservative as an investment? I would make the point that, yeah, they're relatively conservative as an investment. So, and one of the few people who does that would be you.
Yeah, absolutely. So, here in Florida, every state's different. We are a tax lien and a foreclosure state. Not all states do both. Some do one or the other. So in our instance here, say you own a property and you can't pay your property taxes. Your bill comes out relatively in like September, October of the year, and is due April the following year, but you get a discount if you pay in November. So you get a 4% discount if you pay in November. But if you can't pay your property taxes come April 1st, then your property goes up for tax lien certificate, in which we as an investor can come in and buy it during the June online auction, which just closed. So you want to make sure that you're doing your research. They do post those online for us to be able to view about 30 days prior to the auction date. So you've got to do your research. We drive by properties. I want to look at what I might potentially own someday. I want to do my own lien searches to see what could be other liens that need to be paid off, whether by me or by the property owner, and then kind of figure out what we're going to bid on. And what's great about it, why we call it a conservative option for you, is that you're going to know what your interest rate is. What is the county going to pay you for your money up front? And that's what I like to know. I like certainty when I'm investing. I love real estate investing and tax liens. Well, the government always gets paid. So it's pretty conservative and reliable when it comes to an option for us to invest.
Mm-hmm. We had a client actually in Arizona who did the tax lien. I don't remember the number. Let's say they bought the tax lien for whatever, $3,000, but they ended up with, I know it was a very expensive house. Let's just say it was $700,000. I don't know those exact numbers, but I guess what I'm saying is you could get a huge rate of return. And by the way, if you do it in a Roth environment, you don't have to pay in the taxes. Again, talk to your advisor, by the way, for specifics, but you don't have to pay in the taxes. You pull that money out tax-free. Oh, you got to like that if done properly. So I think tax liens make a lot of sense. Sometimes people have an issue. I had this issue at one point when I was investing in tax liens more aggressively, and that sometimes you don't quite win at the auction, which is a little bit of a bummer, but sometimes still, if you get a good deal, it works out.
Yeah, absolutely. Because if there's a mortgage attached to that property, they're coming in to bid. They want to get their money first. And so you've got to know your numbers. What can I buy it? What can I fix it and flip it for, and pay off any liens that might be on the property? If you don't do your due diligence as an investor, you really could lose a lot of money, just like anything else in real estate.
Yeah, but I would say it's, relatively speaking, it's a little bit more conservative. Some people say it's more aggressive, but if you look at the numbers, that's not quite the case. Usually it does make a lot of sense because you're getting your money
Yeah.
from the city, from the domicile as an example. So you can make a heck of a lot of money. I think sometimes it works out really well.
Yeah, absolutely. Especially if you're going to the auction and you're picking up the deed of the property for less than it's worth. Some companies like ours, we've seen an average about a 90% return when we go in and buy the deed of the property. So it just really comes down to it. And it's a lack of education, unfortunately, for a lot of the homeowners. They don't know that they have options to be able to get out from under that before it goes to the foreclosure. But we're here as investors to make money. It's what we do in the US, and real estate's a pretty solid way to go.
Yeah. So wait a minute. Are you with a broker dealer, or what are the logistics of how you work?
Yeah, I partner with a company. So I don't own the company, but I help clients and I connect them to the company that actually goes out and does the bidding on tax deeds. But I also teach about tax lien investing, which is a different vehicle, but relatively the same avenue when it comes to real estate. So I like to do both sides. I love teaching about money and investing, but if you want to be able to, take advantage of a fund that's doing all of the work for you, then I'm going to partner with you and we're going to work together with this company.
I understand. So then you don't have securities licenses, et cetera. So then what are the logistics of working with you? By the way, first, how does someone get a hold of you? I can't forget that because you're going to be throwing out some cool knowledge and people want to get a hold of you and I might forget. So how does someone get a hold of you?
Yeah, so I'm on Instagram, TikTok as Empower Her Money, or just Angela Duncan on Facebook or LinkedIn. Website is morewithangela.com, and it really gives you a lot of information about what we do and the different opportunities. But I just take it from an educational perspective. The more that I can teach you, the better you're going to be equipped in deciding if this is going to be the right vehicle for you to put your hard-earned money.
Gotcha. So the logistics of working with you are going to the website, then all your engagement, letters of engagement or whatever the case would be found there, I guess.
Yes.
Yeah. All right. So give me a case example. I like keeping you on your toes. Give me a case example where you've totally turned around a client. Let's say they were poor, destitute, living in a Volkswagen, all of a sudden make him a billionaire. Give us one case example where you've totally helped out a client.
First thing I do is I get to know the client, because I think we've all made investing mistakes, myself included. I've lost 6 figures on a deal before, so I know how painful it can be. And then you get kind of scared and confused and you don't know how to go forward, right? You don't want to admit that you made a mistake and you kind of sit on the sidelines for a little bit. So the first thing I do is just sit down with the client. What are your fears? What are your expectations? What have you done in the past? How have you lost money? And just be open and honest, because I'm going to be the same with you. So that's the first thing that I like to do. If they're busy professionals, maybe they have a job or, a career or business or something else that's keeping them very occupied, this can be a great fit for them. So I talk about what we do versus what they can do on their own. And then they can decide whether or not this is going to be a great vehicle for them. But within the company that we work with, we pay pretty high returns. We're double digits for the year. And depending on which vehicle you go into, we can pay you 10% every 6 months, which is a great income for you. Now, there are some disadvantages too. So I would love to touch a little bit on the disadvantages on what we do.
Let's go for it. We want the good and the bad. The big print giveth, the fine print taketh away. So go ahead.
Yes. So I used to do a lot with syndication. Syndication's a pool of money that comes together, buys an apartment complex. There's a lot of tax advantages that you get with something like that. In this instance, when we are putting money into a fund and we're paying you interest income, it's taxed. It's going to be taxed just like your ordinary income. So if you're in, a 35% bracket and maybe you pay state income taxes as well, we don't in Florida, but you're going to pay tax on it just like anything else you earned. There's no tax advantages for you to put your money in here. But at the same time, I'm not sure that you can find many other vehicles that are going to pay you 20% a year, through a promissory note that you're going to get with certainty. So yeah, I'd rather pay little taxes and know what I'm going to get up front and not have to navigate through the IRS laws on how to, take those tax advantages that come with some of the other real estate vehicles.
I would agree with you, but I'm going to remind you again and remind the audience what I said earlier. I think in Roth IRA, Roth 401k, they do make sense because again, if you buy a tax lien and whatever, it goes south on the, in this case, I'll call it the vendor. You buy it for $2,000 and you end up getting the house. It's tax free. So I would say there are some tax advantages, but then again, one way to look at it is, well, you could have bought it outside the plan and it's still it have that growth and not have to pay taxes on it, but you do have to pay taxes on it. But would you rather not be able to get a tax lien, or would you rather get a tax lien where it has huge growth in that it's in a Roth environment? But I get your point. I totally get your point.
Yeah, definitely. Think about, putting it in your retirement plan, especially if you've worked for a company for a long time, you've got that 401k or something that you're going to roll over to a qualified plan. You don't know what to do with the money. Qualified plans are amazing because you can invest in so many more options than just the stock market.
Yeah, totally. And people don't realize that. Yep. By the way, are you affiliated with a custodian so you can help with putting it in a qualified plan in a Roth IRA as an example, or is that not the case?
Yeah, no, we use a company called American IRA. They don't just work with us, they work with many other companies. So I love that because, then they can give you other options besides us. So you can continue that education.
I understand. And you have information on tax liens on your website. They're also in qualified plans?
Yes, I do.
Yep. And again, one last time, what's the website?
Morewithangela.com.
Got it. All right, let's ask a couple more questions. So obviously, it sounds like you do a lot of tax liens. You've been doing it for a while. What else do you have that can add value to, let's say, a solopreneur who has, I don't know, $1 million? They have some extra change in their pocket, $1 million, a well-heeled investor, and they want to invest with you. What else do you have that you think can add value to that investor?
Yeah, so this one is the only one that's currently open. We are looking at adding back a storage fund, which is just storage units here in the US. We tend to buy more stuff than we will ever need, and then we pay to put it somewhere. So we don't think that storage is going to go away anytime soon. There are some more places where they're building, especially in like the Midwest market, where the cost of construction is still relatively low with the cost of land. Not a whole lot here in South Florida. We don't have much land, going too expensive for us here. But that's something that we always are paying attention to. We used to do student housing, and with COVID, colleges learn that they can put a lot more students in a class and not require them to come to school. So student housing is something that we got out of, but it's just a constant, we're keeping our what's the saying that you call, like your eye on the ball or something like that, where we're always watching the trends in the real estate market. It's extremely tough right now in the commercial real estate market. So we ebb and flow with what we think the future might potentially look at. And so it's important for you as your clients, to really make sure that you're partnering with someone who is constantly paying attention to the market and shifting as the market shifts, because we don't want to ever stay in one asset class too long, because if the market shifts, then, that could be potentially harmful for our clients. So we're always paying attention to what's going on.
So what you're saying is your specialty is tax liens. That's kind of right now. That's really what we have. So let's say, again, I use the example of $1 million, just kiddingly, but would you say you would take a portion of that $1 million? Let's say that's my overall portfolio. I only have $1 million of pocket change, right? Would you take a portion of it, or would you take the whole thing as an example, even though you have a specific niche?
Yeah, I would never recommend for a client to be all in one basket. So we might take depending on their profile, if they're more conservative, then we would go with a higher percentage in the tax lien environment because it is a conservative investment. But if they're younger, or perhaps they have some time still towards retirement, then we're going to go a little bit more aggressive and work with some other partnerships that are experts in their field to make sure that they're, properly diversified for anything that could be coming up. We're in an election year. We have high interest rates right now. We've got very high rates of commercial apartments being foreclosed and given back to the bank. So we work with a lot of other professionals to make sure that diversification occurs, because if I put you all in tax liens, that's just selfish, and I would never do that to a client. So diversification is still key, but that's more than just putting money in different, stocks or different index funds. There's a whole lot more that we can invest in.
Got it. But I bet I'm willing to bet, based on what you said, you work with probably the financial professionals who, let's say, manage that $1 million, and let's say they want to put an allocation of, just pretending, $200,000 into tax liens. You would work with financial professionals in that regard, with the kind of working with the overall asset allocation of that investor, it sounds like.
Yeah, absolutely. We work
Yeah.
together and put together a full plan.
Gotcha. By the way, we do have, I wouldn't say a huge percentage of our database would consist of financial planners, but a pretty good percentage. I wish I could break that out for you. But anyway, that's good to know. If you're a financial advisor, it probably makes sense, or a professional advisor, even to touch base with Angela. All right, let me ask a couple more questions. Let's go back to the tax lien. Something just hit me. So what would you say is what's the downside? Let's say I want to put 20% of my net worth in tax liens. What would you say truly is the downside as it relates to an overall portfolio?
Yeah, so here in Florida, just going with, the area that I'm most expertise in, if you buy a tax lien and it doesn't get paid, so essentially you're giving your money to the government until which time they pay you back with your interest. It could be 2 years, it could be 3 years.
Oh, yeah.
So knowing that you can't just go and liquidate, right? This is not a very liquid asset. It's actually quite illiquid. So that's a downside. Understanding that you could be into this for a few years, even though you know what you're going to be paid up front, it could be 2 or 3 years. Because what happens here in Florida is if you don't pay your taxes for 2 years, then the foreclosure process can start. Typically, if there's a bank involved, they're going to do the foreclosure because they want to get their money first. But say there's no loan on the property and I own the tax lien, then I can start the foreclosure process, which will ultimately end up in me owning the property. Now, if you don't have time to fix and flip, that could be another disadvantage. I mean, there's a huge upside when you own the property for very little money. But if you don't want to put the time in, if you're not local, that's why I say, if you're going to do this on your own, make sure you start in your backyard. Then you're going to own a property and you're going to have the responsibility to bring that up to code, or you might have to just fix it and flip it to a wholesaler or to a direct buyer. That's going to take some time off your hands. So knowing that these potential things could happen in the future and understanding that risk getting into this vehicle is very important too.
So do you also just do education? So let's say I wanted to pay you just to teach me about tax liens in general, not to invest in tax liens, just in general education. Do you do that too?
Yeah, absolutely. I have a link on my website that allows for coaching. So if you just want to learn more about this, then I can definitely walk you through the process. It does vary from state to state and county to county. So it's really going to depend on where you live as well.
I think that's important. People don't realize that, every city, every county, it totally depends on the circumstance. And by the way, some people only want to invest in their city, but remember, there's the jurisdictions and rules totally change. And no, for one, the rules are different, and then they're always changing in every location, it seems like. So, I mean, it makes sense to, invest outside of your domicile, wherever you live in a lot of cases, because you might be I'm in a bad state, in my opinion, bad state for tax liens, right? They don't even call them liens, they call them something else. But in other states like Florida, it sounds like it might rock, or Maryland, or Illinois.
Yeah, they pay higher interest. Iowa pays higher interest. States that don't do tax liens, but do the auction of the actual deed of the property. Alabama is a great state because you've got 60 days to notify the owner. And if they do nothing, then you know what? That's yours. It's free and clear. And you're going to be flipping that to hopefully create a great profit for yourself too.
Yeah, I feel bad for the homeowner, but it is what it is. I mean, you have to have a city that's moving forward, that's operating, so it kind of is what it is. And you as an investor, not you as an investor, but the owner of the property as an investor, well, they were thinking, they were going to be able to make the payments, and for whatever reason, things went south. It kind of is what it is as far as investments goes. Although, again, I do feel bad sometimes when someone loses a house. It really is sad,
Yeah, but sometimes someone passed away, they have no heirs. And if you don't come in and buy that property, fix it, clean it up, then you're bringing the property values down in that neighborhood as well. So we like to think that we're coming in and helping the neighborhoods as well, not just coming in from a profit perspective, but we educate, we help other people make money, and then we're coming in to bring a property up to the value in which the neighborhood supports, so that the other neighbors, the values of their homes don't go down because of this property that might be in awful condition.
And sometimes you brought up a good point earlier. When sometimes you go into an auction scenario, so let's just say the auction percentage starts at, making up a number, whatever, 12%. And then all of a sudden someone comes in at 11, then it all the way goes down to, I'm making it a 3%. It's like, well, wait a minute, that doesn't make sense as an investor. But for some reason, it made sense to that investor to pay a 3% rate of return. But it's a little frustrating, or at least I get frustrated sometimes when all of a sudden the rate goes down way below where it should. It's like, I spent all the time doing all that research, but it is what it is, one of those deals.
It's part of the process, but those are typically institutional buyers, big funds kind
Right.
of that are, they just have cash sitting on hand and they've got to deploy it somewhere. So I understand that, but that's why you want to have a good list of properties that you're bidding on and don't overbid on that percentage, because you might see that some of the other properties are going for a less percentage. Now, Florida pays up to 18%, but that doesn't mean that they pay that on a lot of them. Right now, though, we're seeing some good interest rates because, you can park your money in a bank for 5%. So if I'm going to take on the risk of investing in a tax lien, then I'm going to make sure that my percentage that I'm getting is higher than that, because there are a little bit of risk involved too.
Yeah, I'm gonna revise your name. I'm gonna call you a Tax Lien Mama. How does that sound?
How about tax lien queen? I like that one better.
I like that. Oh, better. Oh, wait a minute. Is that what I called you before? I like that. This is, by the way, the second time we've had Angela on. She adds value. There's a reason she's back, because she knows her stuff. She's a fun young lady. By the way, how long have you been investing? I should have asked that earlier.
Over 25 years.
And what was your background before? You're like something famous.
Yeah.
You did something.
Well, I started as a financial advisor. I didn't like the lack of control that the stock market gives. So I got into real estate. I owned a top Remax office for many years. We sold $2 billion in real estate, sold that, got into insurance, grew that to one of the top in the state, sold that. And yeah, now I'm a best-selling author, speaker, and I love teaching about money.
All right, we only have a few minutes, so let's talk about your marketing. Remember, again, small business owners, that's our market. Entrepreneurs, solopreneurs, investors, 93% invest in real estate. Real quickly, marketing. You're everywhere in marketing. Your name's getting out there. What are some of the things you're doing, and how are you doing it? How are you being so successful in your marketing exploits?
Hire it out. Figure out what you're not great at and hire it out. Yes. So I will do podcast batching. I will do video batching. Just means I've time blocked during the week to create some content, send it over to my team. And their job is to make sure that I'm seen everywhere, so that people say, I see you everywhere. And then when I'm everywhere and I'm teaching about money, people get curious. They go to your website, they see what we can offer. And that's kind of, a great lead generator. But just like this, podcasting is amazing. There's so many platforms, there's so many podcasts out there, and it really, the audience has grown tremendously with podcasts. So I understand that. And again, we're just staying on trends and staying on top of the marketing piece of it, and making sure we teach more people and we get the word out there to help other people create massive income for themselves.
All right, I like that. Let's okay, what are you going to do after talking about marketing? What are you going to do after this? Meaning, how are you going to get eyeballs on this podcast, or ears on this podcast, this specific one we're doing? I like this. I'm throwing your feet to the fire here.
Yep. Well, I follow you everywhere. So I make sure that that's first. If you're going to be a guest on someone else's podcast, make sure you follow them, rate their podcast, follow them on YouTube, make sure that you're adding value to them as well. And then as soon as the podcast episode is available, my team will create a bunch of clips. They'll post it on all of our social media channels, just making sure that we're promoting the host as well, because you're spending your time and your money to allow for me to be on your platform. And it's my responsibility to give back to you as well.
I like that. Now, have you given us your headshot? Because obviously, you're model-like. So have you given us your headshot so we can use that?
Oh, of course. Absolutely. I am a female. My makeup's done. My hair is done. So yes, the headshot looks amazing.
Oh, that was good stuff. All right. Let's, anything, we only have a couple minutes. What would you say, what have we not talked about in this episode or the last episode we did that can add value to an investor?
Yeah. So without taking either side, make sure you guys are doing your research and paying attention to the political environment. It does have a lot of effect on real estate, interest rates, and businesses altogether. So do your research, become educated, and make an educated vote, but get out there and make sure your voice is heard this year, because it's a very controversial year. Usually is, but for us too as investors, we want to make sure that our voice is heard. So do your research and make sure you get out there and vote.
Angela Duncan dropping some gems. All right. I think if I remember correctly on your website, you had something free, some free book or something. Do you have anything free that you can offer to our audience? And if not, I'll throw something out. Do you have anything?
Yeah, no. I definitely have if you go to morewithangela.com/fire, there's a free book for you on tax lien investing that I put together with some simple steps that you can get started on your journey.
Can you repeat that slowly one last time?
Yes. And morewithangela.com/fire.
That's what it was. Once again, ladies and gentlemen, this lady adds value. Angela, thank you very much. For everyone else who's been here listening, watching, or whatever the case is, you know how to get a hold of Angela. She is Fire Lady. I like that too. Tax Lien Queen. My name is Kenneth French with vastsolutionsgroup.com. Also, obviously, speaking on the podcast, this would be excuse me, this would be Vast Voice, telling business secrets to entrepreneurs. Totally appreciate the time that everyone spent, and Angela, totally appreciate the time you spent with us here today.
Thank you.